Good day, everybody. This is Brandon with Crypto Trades and Tech. In this weekly update video, we have a lot to discuss. Got some interesting price action from Bitcoin and Ethereum, some of the large caps, some core metrics about Bitcoin, what we can be looking forward to, our daily health check dashboard. And what I really want to talk about today is why I'm buying Avalanche and AZERO, what these two projects have in common, why I think they're the next big thing for 2022. But before we get rolling, as usual, I'm not a licensed financial advisor. So if you were to take trades blindly based on anything you hear me talk about, you're going to end up living in a Van Gogh down by the river. So let's get started here. Avalanche and AZERO are two of my favorite directed acyclic graph projects. Now, you've heard me talk about this before, but especially when it comes to building consensus protocols for a decentralized ledger that a smart contract enabled, directed acyclic graphs have a lot of advantages. But the problem with them has been the decentralization part. It's very difficult to orchestrate these graphs decentralized. So IOTA was one of the early examples of this. And in order to properly build a decentralized graph, they had to have a centralized coordinator node, which has been incredibly difficult for them to remove. So with Avalanche, they use something called the snowball algorithm. And I won't bore you with the technical details, but in summary, it's a really good and efficient way of allowing a decentralized set of participating nodes to be able to come to a consensus on how to build these graphs. And then AZERO is a little bit smaller project, much smaller market cap. It's been doing quite well since we entered it, but it's another directed acyclic graph, and they use a large rotating random committee, as it shows here, to achieve this decentralization. And what's great about this project is it's been peer reviewed. I've read through several of their technology papers, and they are really, really impressive. So I'm very impressed with their technology stack and extremely impressed also with their roadmap and the progress they're making in this roadmap. So again, back to the why directed acyclic graph. I was looking for other articles, but actually AZERO's blog has a really good blog article about this. What are the benefits of a DAG? And just to keep it very simple, not to bore everybody with the technical details, but as it says here, it's able to achieve consensus much faster. And you can see here on the testnet, they actually achieved 100,000 transactions per second with just 128 nodes. So as impressive as those performance numbers are, what's even more important is the finality, how much time it takes for confirmation of a transaction finality. This is really important in smart contracts. And you can see here they were able to achieve 416 milliseconds, so less than half of a second of finality on transactions, and similar results for smart contract finality. And if we look at AZERO's chart lately, we actually entered, before it was listed on Gate.io, you can see here the listing date, we entered this at 90 cents, and it's already shot up to $2.40 as of this morning. So we're going to have to wait for a pullback. I've been waiting for a pullback to add. Ever since I added my funds onto exchange to be able to buy the dip, it hasn't dipped back below any of my target prices. Now, on the technical analysis side, AVAX here is looking very strong. You see it had this little bit of a bull flag that it put in, maybe a bullish pennant that it put in. And we entered trades on the bottom of this bullish pennant as it came into support here, which we're still riding those trades on the breakout here. But Avalanche is more of a cross-chain interop chain. So it's got the ability to have multiple projects built on top of it, using different, what they call subnets. So they have some segmentation capabilities, basically, where you can build the overlay of the DAG and snowball algorithm can allow multiple blockchains to be built on that very, very fast overlay. So in my opinion, Avalanche is the proper way moving forward to build these interchain operability platforms. The technology of both AZERO and AVAX and any project that gets these DAG protocols figured out, it's just superior to basic blockchain. Blockchain is extremely reliable and secure. So as a base layer for, say, Bitcoin, it works great. Because all you need is a very stable, secure ledger. Even at the base layer of a very large smart contract platform like Ethereum with a layer 2 scaling, it's probably going to be okay because really high value transactions can remain written to the layer 1 Ethereum core blockchain. But when it comes to the ability to write applications that use a lot of very small transactions that need a very rapid response, the next generation applications being built on decentralized ledger technology, directed acyclic graphs are definitely the way to go. And I see Avalanche as the leader in the interop space, and then I see AZERO as a really compelling up-and-coming layer 1. Now, when it comes to these major interop chains, obviously Cosmos is kind of the granddaddy of the space, the original and the largest still. Polkadot was a really interesting up-and-comer built on this 128 predictable shard ledger. And then Avalanche is the new kid on the block with their snowball algorithm being able to orchestrate a DAG consensus. And you can see the performance numbers here. It's just better technology. So Avalanche just uses a better technology stack. It uses more advanced technology, which is more efficient at achieving these goals, these ends. You can see here, look at the latency, sub 3 seconds for the majority happening, sub 1 second. The transactions per second, which is less of an issue these days, especially with scaling, layer 2 scaling, roll-ups, zero knowledge proofs, those type of things make scaling a lot less of an issue on the transactions per second side. We still want a very scalable layer 1 blockchain just to make it easy to scale in the future. But what really matters is consensus. How long does it take for smart contracts to be executed and finalized? And then also on top of that, another significant advantage of these DAG protocols is they are much more lightweight to operate a node, which is becoming more and more of an issue for some of these projects. The nodes are getting to be to the point where it's not really efficient for an individual to run their own full node. But with properly built projects, Cardano being another one of those that actually has a very lightweight full node operation, it makes the ability to decentralize these networks that much better. Now, I've been talking about these two for a while. I meant to make a video earlier this week, and they both kind of launched, especially AZERO's launched. I've been talking about it a lot on Twitter and in my Discord. But we're looking for a bit of a dip, a pullback on both of these, in my opinion, to be able to accumulate a little bit more. And they will eventually have a dip. This is probably going to happen the next time Bitcoin has a dip. Now, we look at the Bitcoin chart over here. Just want to get to a bit of technical analysis on this chart. So we can see I've got on here, and this is the 4-hour chart, but these are the 50-day, 111-day, and the 200-day moving average. You can see we're consolidating underneath the 200-day moving average. And so far, we've put in a bit of a high, a bit of a low, and we've been putting in lower highs, so we're kind of consolidating. This could be a pennant or a bull flag type of formation. It's a bit of a bullish structure for now because of the impulse to the upside. But should we take out this swing low, we'll be on watch for lower price targets. The yearly open, let's go to the monthly level here, and I can pin the yearly open. The yearly open is an interesting place to look for potential entries. That yearly opens around 42,600, so that is an area to look for support. We haven't quite hit it yet, but I guess we did come pretty close to it in that wick there. Now, I posted on Twitter, which some people didn't seem to like, that most of these gaps, obviously since 2021, all of these major gaps in the chart, I missed one when I posted this, but they've all been closed. And it's not to say that the market really cares that much about gaps. There are enough people, the CME futures have enough volume, but it's more the weekend price action. It's the fact that price gapped up over the weekend. And that low volume, the weekends are low volume. And especially when you get a big move, we had the biggest portion of this gap was Sunday night, right before the open, leading up to the open. When you get these low volume spikes over the weekend, almost always when the volume trading comes in the following week, that gap gets closed. So it's not so much a fact that this was the CME futures gap and that the CME futures traders are going to push this down, which is a part of it. They're going to want to close that gap. But the other part of it is just the fact that this was a low volume weekend pump. And so typically higher volume trading wants to come back down and take advantage of that liquidity. So again, the odds are this gap is going to get filled, which the gap, currently the bottom of that gap is just below the yearly open here, I think at 45,000. So not the end of the world for a retrace back to 45,000, but definitely an area to be mindful of. Now, again, that's not to say that that gap has to fill. We are, again, forming this kind of bullish flag structure here. And we have been into this resistance area that we were looking for And should we break the upside of this bull flag, we could have quite a bit more upside ahead of us. When you look at this move in the context of the weekly levels on the fib chart, we basically closed right at the 382 level from the entire sell-off from the $69,000 November peak to the $33,000 January low. So far, we've retraced to the 382, closed right at it, pushed above it, coming back to that 382 level, which is 46,760. The next level on the chart is the 0.5 or 50, right at 51,000. You can see there's some weekly resistance right there. So should we break to the upside on this bull flag structure we're putting on a lower time frame, 51,000 would be our next logical target, which is again right at the 0.5 fib retrace level, and it's also going to be a weekly supply resistance right there. That does present a reasonable trade setup idea if you were to buy coming into this fib level support right on 46.7. I would look for an area of supply right here, probably closer to 47,000. Buying into that area with a stop loss below this recent wick at 46,500 would present a pretty strong, almost 10-to-1 ratio. The only problem I have with that trade is this, again, appears to me to be a bull flag. And I would expect the odds that we continue down lower. Maybe we can continue even flagging, but take out some of that lower liquidity all the way down to that $45,000 gap, this is that gap bar, that 4-hour bar that sent us right before the open Sunday, that sent us from the prior week's closing price into the new open. I would expect this gap to get filled. And so for me, it's a pretty low probable setup. So I'm probably not going to take that entry myself. If you look at this chart, in my opinion, finding some support area of supply right below that weekly, the prior week's closing that gap here about 44,830. There's a 4-hour support level right about here. Taking that entry with a pretty tight stop underneath this would be a little bit more favorable potential entry. Looking at it here on the CME chart, that's what that would look like. 45.2, I guess, would actually be the level. The top of these last two, 4-hour before we went into the weekend. Gap close, wick down, and bounce out might be an area to look for. As you can see here, that it's actually the very top of my major support band that I have. The midpoint support about 44.5 down to 44.2. Right at 44,000. The other small area that I've indicated is I believe that our moving averages are going to consolidate, which they are exactly as we would expect. These moving averages are starting to bunch up a little bit now. My expectation, generally speaking, is that we get one more test of these lower moving averages as they start to recover. And then we find support off of them and then finally break through the 200-day moving average, and then off we go. These are not predictions. These are just observations. I'm just talking about possible scenarios. It could clearly break to the upside right here. The fundamentals are in place for that. Let's go take a quick look at some of the fundamental metrics. You can see balance on exchanges continue this precipitous decline. You can see just how very strong the decline has been in coins coming off of exchange here recently. The number of nodes, let's go back out to 3 months and all these. The number of wallets with 0.01 Bitcoin balance continues to rise very precipitously as well. Funding rates are positive. They're not negative. So for the most part, we don't have a large influx of shorts versus longs, but we do have a large increase in open interest. So over here on Glassnode, we can take a quick look at the open interest. You can see the very strong increase in open interest here. Now, while funding is neutral, that means fairly neutral, slightly positive. It means that there's slightly more longs than there are shorts potentially in the market, but it's pretty even. And so when you get a very large OI, open interest spike like this, it means there's probably going to be some volatility both ways ahead as that open interest gets kind of purged from the system. If we go back in time, we see every time we've reached this level of open interest or a very strong increase in open interest like this, it gets purged almost every single time. And that is generally speaking a sell-off, but we can also purge open interest on the upside. You can see here, whenever we shot to the upside, you see this little reduction in open interest right through here. So this was a bunch of short side open interest, and that big dip right there was on July 25th was the short side of the trade getting liquidated, which is far more infrequent than the long side of the trade getting liquidated. But nonetheless, volatility both ways here, it will decrease open interest. You can see these big fall off, the big moves up in open interest and the big fall have been more in line with a price correction. So when open interest rises like this, again, the expectation is for some volatility. There's getting to be a decent amount of leverage built up in the system. Now, of course, as we saw in early 2021, on the back of very strong price action coming out of 2020, we had a very strong increase in open interest. And these we get quickly reset by a little bit of a sell-off, but they continued up in aggregate for quite a while here, and they reached some very high levels, roughly right around where we're at now. And then obviously in November, we saw a very big increase. We're going to expect open interest over time is going to continue to rise. So seeing it rise at a moderate pace is not so much a big issue, as there's just more participation in the market as the market matures. It's these very large spikes of open interest. We can expect some volatility typically off of these big spikes in open interest. And so yes, for me, I've closed trades coming into this resistance zone that we talked about, right around $48,000, right coming into the 200-day moving average as well. This is also the top of this channel that we've been watching, this bottoming, potential ascending channel accumulation pattern that we have. My expectation is that we get a sell-off at least back to this upper end, close that gap, this upper end of the price range here, right around $44,000. We could hold this very strong uptrend trend line and bounce back out of there. That's my expectation. Again, it can break out here. The conditions do exist. If we have enough buying come in, that it can break to the upside right now after this little bit of consolidation under this resistance. Can roll over back to the upper part of this resistance and bounce from there, holding the stronger, more near-term trend line. It can also come all the way back to the midpoint of the trading range, which would put us right between the 111 and the 50-day moving average I have here. You can see there's a lot of historical price action in there that's going to provide some support. And then lastly, of course, it can come all the way back down to the bottom of the trading range and test these lows again one more time. Now, at a very macro level, this does look like a potential bear flag, of course, but the fundamentals are so very strong, and this move back up into the top portion of this has been pretty strong, but it's an area to use caution because this, in theory, could be a bear flag. Now, I don't believe that this is a likely outcome, but the possibility does exist that fundamentals weaken as we sell off, and we sell off all the way to the bottom, and then get a rejection and get a bit of a bear flag play out. I have a thread on that, what that would look like, what the worst case scenario would be on Twitter. Take a look at that thread. But again, as of right now, what I'm waiting to see is as we come back to what I expect of the upper end of this support range, this trading range, or the midpoint, to see what price action does and to see what fundamentals do to look for our next set of trade entries. Well, I hope you enjoyed this video update this week. If you did, please like, and if you haven't subscribed yet, please consider subscribing. Consider sharing this video as it helps with circulation. I really do these videos for our community. We're not necessarily looking to grow. This is more of a video blog update. But if you're interested in joining our community, you can find the Discord in the link below and get active in participating with us. I think we have a really, really good group of traders, especially younger traders that are really growing very fast, that have learned immensely over the last couple of years. And there are some really, really good trade ideas that people are starting to share in our Discord. So if you want to take a look at that, I post a lot in our Discord server as well, my ideas, different scenarios that I see playing out, and then I post all of my trades. I do try to post all my trades on Twitter, but I really focus on the Bitcoin trades. When I take an entry in Bitcoin specifically, I post those on Twitter and update my Bitcoin tracker just so everybody can see my progress and my performance as a trader on Bitcoin specifically. The smaller trades, the altcoins and even equities, sometimes I'll share my actual trades or trade ideas or scenarios that I see potentially playing out in our Discord server. Don't necessarily share all that information on Twitter. Again, thank you all. Thank you for the support. Have a good day.